So, friends, let me just quickly continue from where we left last time. We were talking about current assets, and as you can see, you have different items under current assets like cash, stock, inventory, prepaid liabilities, account receivables, etc. So, what are current assets? In simple terms, these are assets which will generate cash for the business. So those assets which are short-term assets and they will be used in the operating cycle to generate cash for the business. These are called current assets. Now in CAB there is a topic called unutilized advance license, and the question asked is whether this can be considered as a current asset. We will explore this a bit. What is advance license? Advance license are licenses issued by the government to a company which is importing raw materials from abroad. So it basically it wants to get goods from another country, and for getting that goods or raw materials, it has to pay some duty. But if they get this license from the government, they will save the import duty. So it allows the company to import raw materials duty free. Now, how does it work? Let's assume a company imports raw materials of 50 lakhs and the import duty is 10 lakhs. So the total cost for getting these raw materials from another country would be around 60 lakhs. And this hike is due to import duty. Now, what is the advantage of license, advanced license? That this import duty would be waived, and so the cost of inventory or raw material purchase would come down. Okay, so when that happens, the funds required for buying these items would be reduced. The liability which we would otherwise incur would be reduced. Thus, the working capital requirement of the company will also come down. So just to sum up, cost of raw materials is basically a current asset, and it will go up. The cost will go up if its import duty is added. So and that is why normally we use advanced license. Now, the question always asked is whether such unutilized advance licenses can be treated as a current asset. So, what does that mean? That this benefit is there, the company has got this license, but it is not used it. So, it is lying unutilized. So, can we consider that item under balance sheet and show it under current asset? Okay, so we will just analyze this. Unutilized license, does it have an economic benefit as of now? No. It, you see, current asset is something that provides immediate financial value, like cash, receivables, or inventory. But when we have an unutilized license, it is just a right. It is not generating any cash, or it will not reduce expenses until it is used. So it is not yet realized or earned. The company must import goods first and then realize this savings in their duty. So, and also unutilized licenses cannot be converted to cash. So these are basic definitions of a current asset, that it should be convertible to cash within a short period of time. Normally, we assume it as 1 year. So, for these reasons, unutilized licenses, cannot be considered as a current asset. Now, let's discuss some questions to test your learning. What key quality of current asset is crucial for determining a company's solvency in balance sheet analysis? So, current assets and their qualities. They're talking about historical appreciation, their rate of depreciation, their liquidity and conversion speed, their distinct categorization. So, company's solvency is, we discussed last time, it is related to the survival of the company in the long term. But since they are mentioning current assets, we are assuming it is related to the short term survival of the company. For short term survival, what is the important criteria? That the raw materials has to be converted into finished goods, and this goods has to be sold, and from the sales we have to get cash. So this conversion from raw material to finished good and to sale and to cash then. So it is basically a cash to cash cycle. We start with cash and we end with cash. So this cycle has to be completed as fast as possible. And if your current assets are liquid and they have good conversion speed, that will help your business generate cash faster. So the key quality is option C, the third option, liquidity and conversion speed. Now the next question, category of assets that have no physical existence but provide value to a company through rights and legal claims. So you cannot see them as an asset, but still they have value, which are more legal or right based in nature. So we discussed this last time. The answer is intangible assets like patents, copyrights, trademark, brand value, etc., which you cannot see in physical form, but they do have legal and other rights, and they bring value to the company. Next question, which financial detail does owner's equity section in a balance sheet generally include? Owner's equity section. So under balance sheet, you will have liability and you will have assets. And in assets and liability, you will have owner's equity, which is nothing but the funds invested by the shareholders or the owner of a company into the business. So look at the options. Short-term liabilities, no. Owner's equity, you will not see. Short-term liability, you will not see creditors claim. You will not see accrued expenses. So what you will see under that section is retained earnings and stock. So it is also sometimes called shareholder funds, owner's equity, all are the same thing. And what are retained earnings? When the company earns a profit, either you can distribute that profit or invest that profit back into the business. When you invest it back into the business, it is retained. Thus, the name retained earnings, and this will form part of shareholder funds or owner's equity. So I'll stop here. We will see you in the next lecture.